Hi guys, good morning. Hope all of you are doing good. This is vlog number 52 in Decoding Equity Markets series. I'm in Kerala right now and I'm taking my CA final classes. So we got full day classes over here. Started yesterday only, and I thought without taking any chances, it's better I get up in the morning and do a video with you people so that I can update you on the markets, what we have been doing for last couple of months. So, how we are planning this video, we'll first do a recap of what happened last week in the markets, the Indian and the US markets. That's point number one. Point number two, we will discuss on the macroeconomic situation in China, US, and here in India. And then we will talk about the indices, the US indices and the Indian indices, and how I see the markets from here on, what measures you have to take while trading or creating exposures, the fresh exposures. Then a stock pick from my end, and finally a life hack. This is how we plan it. So, five topics of discussion we have. Okay, so starting with the US economy, guys, 26th of July is when the Federal Reserve will decide on its next rate hike. Most of the economists are of a belief that this time again a rate hike will be done of around 0.25%, that is 25 basis points is what they're expecting. And most of these economists, so Reuters has taken a poll from 106 economists. Most of these economists are of a belief that this may be a last rate hike. This might be a last rate hike. Why they say that is because what I told you in my last video, the consumer index, the consumer price index has come down in US to 3%, and it is less than what they anticipated. So the inflation data looks in control right now, and that is the reason why they feel that this may be the last rate hike. Okay, so the economy has been resilient in US. Unemployment has been low. CPI, like I told you, had been 3% in June from 4% in May. And some economists are also of a belief that a rate cut may happen by end of 2023 itself, which I feel is over optimistic. It won't happen because see, controlling inflation is one thing, and inflation hitting back in the economy is another thing. I think now the US government, the US Federal Reserve, because they have been able to tame inflation in this zone of 3.5%, they're not much bothered about inflation numbers going wild. But what they are fearing right now is that if they go too lenient on the interest rate hikes, or on the contrary, like some economists are saying, if they go for rate reductions, which I personally feel is not even a possibility till March 2024, is what I say. This is my understanding. It is not even a possibility, because if they have to sustain this controlled inflation, they will have to be strict with the rates. Okay, if they don't go for rate hikes, it's okay, but then they cannot go for a rate reduction at this point of time, or even for next 6 months or 9 months time. So I feel anything possible is only after March. But good news at this point of time, long story short, is that inflation seems to be well under control. Once you control inflation, your biggest risk is going into a recessionary environment, which also does not seem to be a situation. Why? Because your unemployment rate at 3.6% right now is at 5 years low, which means job opportunities are being created. Corporate profits are looking in good shape based on the result of some, good organizations. The consumer spending has been high. So overall, the economy looks very resilient. There is no probability at this juncture where we see a recession coming into the US economy. But like I told you, a harsh policies from here. So we have that risk reward, balance beam, where they have to see if they are going lenient on rate cuts, if they are being very lenient with the rate hikes, or if they go for rate cuts, then you might see inflation hitting back the economy. On the contrary, if they go for further hikes in interest rates, you never know, the economy may go into recession. Believe me, right now, the economists in US are also divided in their opinion, with some of them feeling that recession will happen. It has been deferred as of now, but it will happen next year. This is what still some economists believe. Most of them believe that no, there will be a soft landing from here on. Soft landing means when you are trying to control inflation, a wild inflation, and then soft landing means you controlled inflation and economy sustained, economy stabilized, it did not go into recession. Because the next, once you control inflation, the very next thing that happens is a recessionary environment in the economy, a disinflationary environment. Stagnation happens in the economy. There will be less demand. There will be less demand in retail segment. There will be less demand for real estate. But that does not seem to be the situation in US at this point of time. Probably that is the situation in China right now. I read somewhere the KPMG chief economist, he is of a very strong belief that the chances are very high that the US economy will go for a soft landing, which I just explained you. However, he also cautioned that nothing should be taken for granted at this point of time, because any leniency from US Federal Reserve, like a rate cut, like I explained you, may cause inflation to hit back. And if that happens, then you are back to square one and the problems will again start unfolding. The CPI number at 3% is very encouraging because it was 4% in May, and if you compare it with last year summers, it was around 9%. So they have done things. We should acknowledge the efforts being put in by Federal Reserve. They have been successful in taming the inflation and bringing it into the controlled levels. Are they 100% satisfied with existing inflation rates? I have explained that thousands of times. No, they want it to be somewhere close to 2%. That is what they're targeting. So next 6 months is what I feel is going to be very crucial, because we have to see how things unfold in next 6 months. Because next 6 months, if this is the last rate hike, and if they go for status quo beyond that point, then two things are possible. Either economy will slowly start recovering with controlled inflation. That is the best thing that can happen, both for economy and for equity markets. Or if again they start feeling that inflation is going out of control and they start increasing rates again, the interest rates again, that may throw the economy into recession. So they have to balance that out, correct? At this point of time, if I have to conclude, things are looking pretty good in US economy. Okay, next 1 week is going to be crucial for the US equity markets. If I now stop over here and give you a small recap into what happened last week. If you remember, in my last video, I told you Dow Jones going above 34,500 is surely going to open the doors for levels of 35,200, 35,300. And if that is being crossed comfortably, then Dow Jones may be heading towards 36,000. Did I tell you that? And I said Nasdaq, I am not being overly bullish because Nasdaq has already performed, and at the same time I am not expecting any kind of a fall in Nasdaq. This is what I told you. Last week itself, what we anticipated has happened. Dow Jones went past 36,300 levels. And now that 36,300 to 36,500 becomes a zone within which it will try to sustain for a while. It will try to consolidate its zone in that range until and unless something really bad happens again. It will consolidate in that zone, and from there, once it starts its journey upwards, then another 600-700 points upside is what I see at this point of time, which will make Dow Jones head towards 36,000 mark. And I also told you, if Dow Jones starts moving up convincingly, it will also help Nifty go towards 20,000 mark, which you also saw this week itself. Nifty did its high of 19,991, if I remember correctly. But from there, yes, Friday was not a great day for Indian equity markets. The Nifty has shown a lot of downside on Friday. Bank Nifty was resilient. Bank Nifty was sustaining those levels close to 46,000 mark. But one party spoiler was Infosys results. More than results, I think the results were okay for Infosys. The bigger problem here is the fact that their guidance has been relatively not disappointing. They have cut down on their revenue guidance in the range of 1 to 3.5% from their earlier revenue guidance of 4 to 7%. Is this good or bad? I still sense there is an opportunity to enter into Infosys stock. I'll tell you something, guys. These people are level headed people. They think a lot before coming up with the guidance. And the management has taken a conservative approach. The company never said there are internal problems going on. The company made their point clear that they are working their level best to get artificial intelligence systems in place. They are training their employees for artificial intelligence. They even signed a deal of $2 billion with one of their existing clients in respect of artificial intelligence, where the services will be rendered over next 5 years. Infosys might be the very first company to incorporate artificial intelligence services in their offerings. You understand what I'm saying? So they are saying the demand looks subdued because of economic turmoil at global level. There are no inherent problems. They are feeling the problems are at US or Germany level, or I mean the European countries, because of which the demand may be subdued or some projects may be procrastinated, deferred for the time being, because of which the revenues may get hit. I in fact feel if they have given a very, very conservative guidance from here on, they have played it very safe basically, guys. So they have given you the least what they expect can happen, the worst possible that can happen, in which case they will somewhere be sitting between 1 to 3% of their revenue growth. But what if things change at global level? That's why we study macroeconomics of global, right? But things if change at global level, there may be surge in demand, there may be better revenues than what they have given a guidance for. See, guidance is one where reaction happens, and then there are actual results, and then you compare the actual results with the guidance. So if my actual results are better than the guidance, then at the time of giving guidance, obviously the markets would have reacted in an adverse and harsh manner. But once my actual numbers turn out to be better than the guidance, chances are very high the stocks will rebound, and rebound very strongly. Because I still feel the downside left in IT sector stocks is less. And if you see, the mid-cap IT sector stocks have still shown you upside of 30-40% from their lows, what they did in last 6 months or 10 months, 8 to 10 months time. But for a stock like Infosys, hardly there has been any recovery. So I personally still have a strong belief that for somebody who is an investor, you want to go safe with your money, you don't want to see a lot of downside, Infosys is one stock which should be considered a part of your portfolio. This is my understanding. I am not bothered about 1330 to go down to 1200 levels. What I see is the downside is limited from here. But once the company starts operating again, the things start looking good at economy level, probably a revival will come in soon. This week is very crucial. Now coming back to our US story, this week for Dow Jones, probably the deciding factor whether it will sustain in this level of 35,300, 500, or it will drop down to 34,800 levels again, or it will go past to 36,000 levels. This week, the earnings of Microsoft, Google, and Meta will be given in the next 7 to 10 days time. And that probably will have a big impact on how the Dow Jones is going to play from here, and Nasdaq even. Okay, so that's for the US front. 26th of July is when they're going to decide on the rate hike. If 0.25% is the rate hike that is going to happen, probably there won't be much reactions from the market. Yes, the more deciding factor is how Powell comes and speaks. But I'm very clear on one thing. I don't see him coming and talking, positive things, because I've told you earlier also, they don't like talking a lot positive because they don't want markets to do any kind of early celebrations. They are very hawkish in their commentary, and they are right in a way because they don't want you to get a complacent feeling, a feeling of complacence that now things are under control. No, he does not want to give you a rosy picture. He's, like I told you, they will be on high alert for next 6 months. Inflation hitting back is having high probabilities. recession coming into the equity markets, recession coming into the economy is also high probability. To control this, a lot of sophisticated measures have to be placed by the US Federal Reserve. Okay, so this is for the US economy. Overall, if you ask me, the outlook is positive for US economy. Things are right now looking under control. Next is China. The first half of Jan to June, that is 2023, the growth rate registered by the country was 5.5%. In third quarter, because of the sluggishness that they reported for the June numbers, which I spoke in my last video, the third quarter growth projections have been done at 4.7%. It has been reduced. And for quarter four, they feel some revival will come, some recovery will happen, and it will be somewhere close to 5.2%. All said and done, but they are anticipating that their first half was still better than their second half, which means second half they might have more pain left for themselves. The foreign companies' investments in China have come down, which again is a bad news. Their exports are down by 12.4% in June. Spoken in my last video also. Housing projects investments have gone down by 7.2%. I keep saying that the housing projects are not catching up. The demand for housing projects is not catching up in China, even though government has tried its level best to reduce interest rates, to cut down the mortgage cost, and to give some lenient covenants. Still, demand is not picking up. The unemployment is at all-time high of 21.3%. Overall, things are not looking great. A large stimulus, which some people keep talking about, probably does not seem to be on the cards for one simple reason. And the reason is that the amount of debt which China has, not just the central government, but even the local governments are piling up on debt, and the debt story right now for China is not looking great. So any kind of extravagant stimulus is not looking possible on the cards. And like I told you, even a good stimulus package being introduced by Chinese government will not help much because of the size of its economy and the size of its population. So it seems to be a situation where recovery is only going to be a slow pace recovery. Okay, the quarter two GDP rose 6.3%, but the economist polled for a 7.3% as per Reuters. So the GDP growth rate also for quarter two was not up to the mark. The retail sales are low, the consumer price index is down, demand is not picking up. China is almost on the brink of going into a disinflationary environment. But all said and done, the Chinese government are coming up with a lot of commitments, and looking at their actions or their behavior or their discussions, one can clearly see that the government is seriously concerned about the recovery of their economy, and things are being done strategically by the government to ensure that a quick recovery happens. Okay, that is what they are doing on their part. For Indian economy, like I told you, Infosys was one big discussion. Friday markets fall. I would say, I don't know if I'm correct when I say that, but I feel, sometimes what happens when in a classroom there is one mischievous student who does something going out of the decorum, and then the entire class is punished, irrespective of who did what. Everybody is punished. Everybody gets that duster beating on the palm. That is the kind of thing which happened on Friday. The guidance given by Infosys, if you see, the results for Emphasis were good. The Coforge guidance was good. Persistent results were okay. I think even for TCS, the results have been okay. The guidance has been okay. Still, the results for HCL Tech and Wipro were also okayish. I won't say they were bad. We were anticipating something like this. That is why such corrections were happening in these stocks for so long. But Infosys was the party spoiler on Friday, and the entire sentiments, for the IT sector has changed on Friday, and their guidance is throwing light on how struggleful the next 3 to 6 months is going to be for IT stocks. That's why IT stocks were almost down by 4 to 5% on an average, with Infosys being leading from the front with a fall of around 8%. And I seriously feel this, that last 6 months I have been constantly telling you to buy IT stocks, and you have seen some revival in IT sector stocks, with some stocks giving you as much as 30 to 40% return. If you take my word for this, guys, I'm still very, very bullish on IT sector stocks, because like I say, the worst has already been accounted for. If tomorrow US economy again goes into inflation or goes into recession or Chinese economy falters, then yes, the stocks will bleed. Then it's not just IT, everything will bleed. Everything, real estate, cement, everything will bleed. But if things are going to improve from here on at macroeconomy level, IT sector will perform because IT guidance is based on problems at macroeconomic level globally. So if global situation improves, performance of these IT sector stocks will also improve. And you don't, right now when markets are at all-time high, you want to be sitting on stocks where percentage of downside risk is less. And Infosys or TCS or other IT stocks are the safest in such situations. Okay, that's my take on it. Indian economy, as per Axis Bank chief economist, Indian economy will grow at 7% for nearly a decade. And this he has said based on how India has flourished in last 15 years. This is actually a very good number. So if economy grows at 7% for next decade, that's actually going to bring in a lot of foreign institutional investors money into the country. A lot of foreign funding will come into this country. And we as an economy will look very strong. In fact, if you see the Standard Chartered research team from India, research team in India has forecasted that by 2030, India will become a $6 trillion economy, making it the third largest economy in the globe after US and China. Okay, and I only see there are a lot of news, but that news becomes a part of my vlogs only when I strongly believe in that. And I try to give you my own logics for that. Okay, it's not that because Standard Chartered is saying so, okay, 2030 we will be a $6 trillion economy, or because Axis Bank is saying so next 7-10 years we will register a growth rate of 7%. No, only if I believe something, I make it a part of my vlog. Otherwise, there are a lot of news apart from that also. How about banking stocks? They have surprised pleasantly. They have surprised. IndusInd Bank, ICICI Bank, Kotak Bank, every bank, HDFC Bank, all of them have given their numbers better than expected. All of them, almost all of them have given numbers better than expected. And that is why you see Bank Nifty is crucifying. It's going up like anything. And there does not seem to be any stopping for Bank Nifty. Okay, but I still, like I told you last time also, I'm still bullish on stocks like HDFC Bank and Kotak Bank. They have still not performed. They have still not participated in the rally. My top pick right now is again HDFC Bank. After this merger, I still feel it is a very cheap stock with a target of around 2,000. You can definitely consider buying a HDFC Bank. Guys, like please understand right now, picking up stocks will purely not just depend on what returns I can make. It will also depend on in times of adversity, what stocks will fall less on relative basis. That also have to see now. That is my natural hedging. That is my natural hedging. I don't just want to see stocks where I can see my money growing fast. Now is not the time to see your money growing fast. If you wanted your money to grow fast, you should have invested in markets when Russia declared a war against Ukraine, when actually people shy away from the markets. Now when markets are at all-time high, they are very prone to any kind of a fall because of economic situations or because of geopolitical tensions. You don't want to put your money in stocks which can fall like a pack of cards. You want to go safe with your investments where stocks are showing some level of consolidation. The stocks have not shown any frenzy upside and the stocks have a limited downside. You want to go with those kind of stocks. Understood? As per Dinesh Khara, the SBI chairman, he feels RBI in its next monetary policy will not go for a rate hike, but at the same time, we should not expect a rate reduction because the food inflation in last quarter has been on a higher side. So he's expecting that we may have a status quo, that is no change in rates, which again is still a good news for us. Temasek, I think I am pronouncing the name correct. Temasek is one of the Singapore-based firms, and they have committed to invest $10 billion in India in next 3 years. They have already invested around $2 billion in India in two companies. One is your Manipal Healthcare, and the second is Atomberg. So these two companies they have invested, but they are planning to put in around $10 billion in next 3 years in Indian economy. So again, they are also very bullish on Indian economy. How about Reliance? Reliance profits dipped 6% in quarter one. because of weakness in the oil business, is what they say. But if you look at their other business segments, is this disappointing? I personally don't feel that, because Reliance was trading close to 28.20, 28.30 just last week, and then the demerger happened of the Geo Financial Services. Now, oil, retail, and Geo telecommunication, these are the businesses on this side of Reliance. Out of this, oil segment did not do well, so it pulled down the profits by around 6%. But if you compare the Reliance retail business and the Geo telecom, they have done better. So Geo net profit was up by 12.5% in this quarter. Reliance retail quarter one net profit has risen by 19%. For Geo, even the ARPU, the average revenue per user, was up to 180.5 as against 179 in fourth quarter of FY23. So even the ARPU is constantly growing. This ARPU used to be in the range of 138, 140, then it went up to 150, 155, 160. Now it is sitting, they are sitting on 180.5, and they also feel that the subscribers, they are adding subscribers thick and fast for Geo telecommunications, and the company is overall bullish on that front. So only disappointing was the oil segment. Obviously, we all know the oil correction has been very high. Are they going to have further fall in their profits? The answer is no, because you can't expect the kind of fall which happened in crude oil prices in last 6 months or so, because of falling demand or Chinese economy slowdown or because of oversupplies. It does not seem to be a case that there will be a similar kind of a fall in crude oil prices going forward. So if the oil business can be stabilized for Reliance, then the other two businesses are anyways doing good. So I think for Reliance also, things are looking okay at this point of time. Understood. Talk about the index. Nasdaq at 14,000 plus looks very comfortable. It did a high of 14,446, but then it corrected a bit from there. And like I told you, the results of Microsoft, Meta, and Google Alphabet, these things, how their results turn out to be, how they talk about AI, how they give you the guidance and commentary for their upcoming quarters, will have a lot of role to play in how Nasdaq moves from here. Understood. Dow is at 35,227. It did a high of 35,372. I told you one resistance is seen around 35,300, and then I feel the deciding factor will be the range between 35,300 to 35,500, where I feel Dow Jones may take its time, a little time. We also like that kind of a healthy upside, and then from 35,500, if things go good, it may be heading towards 36,000. In which case, your Nifty will be somewhere in the range of 19,700 to 20,000, or it can even go on a higher side, is what I feel. Understood. Nifty right now is at 19,745. Everything looks completely perfect. It's not creating any kind of negativity at this point of time. Some correction, like I told you, was because of predictions of Reliance results not being that great, was already made on Friday, and Infosys numbers and the guidance was not up to the mark. These are two main reasons why markets fell on Friday. Apart from that, nothing seems to be problematic at this point of time. My suggestion, stay cautious, stop taking over exposure, do trades within your limits. That is what I suggest at this point of time. My pick for this week, guys, is D-Mart, Avenue Supermart. I personally like this stock a lot, but it has not performed in last 1 year or so. A lot of times my targets have been done because the stock value is high. It's close to 36, 3700. A lot of times I have asked my clients or my subscribers to enter into D-Mart at around 36, 3700, and then we booked the profits at around 4,000 levels. 4,100 also it did, 4,200 also it did. But then it again drops down to these levels. But the price at which right now D-Mart is available at 3675 is almost a 20% correction from its 52 weeks high price of 4,600. And in October 21, it did its all-time high of 5,900. So if you compare from 5,900 to 3,675, almost a correction of 40% has happened in this stock. Numbers-wise, company looks promising. Yes, competitors are coming into the business like Reliance Retail. That is the reason why stock seems to be under pressure. But if you do a standalone analysis of this company, things look very much in control. Their revenue has grown in last 5 years from 20,000 crores to 42,839 crores. Their net profits have grown from 900 crores to 2,378 crores, which means almost a 2.5 times jump in its net profits. Their EPS has gone up from 14 to 36, which again is a jump of around 2.5 times. The return on equity has been sustaining in the range of 15 to 16%. In 2023, they did 15% return on equity, which is decent. Promoters are still, the promoter of this company we all know is Radhakrishna Damani. He's holding 75%, close to 75% in the company. Since its IPO, he has been continuously holding on to his holding, which also suggests if promoter is continuing with holding the stock, it shows how confident he is about his business, where he does not even want to sell his holding by 1 or 2%. FII, DII both holding close to 8%, with public having less than 10% in the company. I personally feel this is a good buying opportunity for DMart. Again, I am suggesting this stock not because it can give you a lot of return on the upside, but because I feel this stock has limited downside exposure. Okay, so this stock you can buy at around 36.75 with a target of 4,000 in mind. If you want to book your profits a little early, anywhere around 39.50 you can exit. Otherwise, you can hold it up till 4,000 also. Okay. What is my suggestion for you? What is the life hack? Deal with heat waves. I'm giving you one analogy and then I will explain the same to you. Deal with heat waves instead of breaking the thermometer. I'll repeat it one more time. Deal with heat waves instead of breaking the thermometer. Now, what does this analogy mean? It means that when you have a situation in front of you, when you have a problem in front of you which demands you to put in efforts, then you put in the efforts. You do the work. You put your actions into performance instead of ignoring the situation. If you have a situation in front of you, you deal with it. You put in the efforts. You take accountability. You take ownership. You take onus. If you see a situation demands you to do hard work, then do it. Don't look for confirmation bias. Don't look for alternatives. Don't look for ways of ignoring the situation. If the situation wants you to work for 15 hours a day, do that. If the situation requires you to put in 200% of your efforts, put it. Do not digress. Do not take a back step. We got to learn to take ownership for our work. We got to learn to take onus, the responsibility, the accountability. We have to learn that. So when you have a situation where you want to, you have a situation like, let's say, we'll take one example. You have your CA final exams in this November. So obviously, this is the time when you should be studying for 15 hours, 16 hours, 17 hours a day. Instead of making your life easy by writing only one group instead of writing two groups. If your job in the organization, based on the work purview which you have, if your job requires you to spend 2 extra hours in the organization so that you can complete your work on time, you can meet the deadlines, then do that. Why ignore a situation? Why ignore the responsibilities which you are expected to fulfill? Think about it. So when we have a situation, guys, like today I had to do a video. I have a class. I could have easily said, no, today I won't be able to do a video because I have got a full day class. But if I know I have taken responsibility for doing the video on a weekly basis and I know things are in my control, then I will do that. Even if I have to get up early in the morning, prepare my notes late night yesterday, I will do it and complete the work. A task in front of you has to be done. If you have taken ownership, you have to do it. Okay, I hope the video has been useful, guys. If you like it, leave a thumbs up, leave your comments also. And till we meet again. So next Sunday also I'm in Kerala itself. I will be continuing my classes for next 10 to 11 days. And we'll catch up again next week to discuss how markets would be in this week. I hope all of you stay safe, stay invested in the markets, but don't overdo things at this point of time. It's a wait and watch kind of a scenario. I'm not saying don't do investments, but I'm saying just be cautious with it. Just be a little more, in control of your emotions. Don't overexpose yourself to the trades right now. Let's just wait and watch how things are going to be from here on. Let's wait for the US commentary which they're going to come up with this week, and then we will see how to go about with the markets. Chalo, bye bye. God bless all of you. Cheers. Thank you.